Good morning. I'm Tim Nyland, Director of Research at Pacific Point Advisors in Rancho Santa Fe, California. In our last webinar, we looked at the relative valuation of the S&P 500 technology sector. And I mentioned that all three of our stable earnings core equity portfolios are currently trading at valuation discounts relative to the S&P 500. In today's webinar, we will illustrate what risk-reward looks like for each of the stable earnings core, dividend, and ESG portfolios. And we will explore opportunities to allocate additional capital to the strategies when the risk-reward is favorable. Stable earnings portfolios have been designed to exhibit steady underlying portfolio earnings growth with the potential to meet or exceed market returns. All of this with lower levels of risk than the overall market. At Pacific Point, we illustrate this relationship with our 25-year price and earnings chart with the price line represented by the blue line and the EPS or earnings line represented by the orange line. You'll want to make note of the price drawdowns and the cyclical nature of the underlying earnings of the S&P 500. The dependence of S&P earnings on the business cycle results in Pacific Point stable earnings portfolios averaging as much as 6.25% higher underlying annual EPS growth each year over the prior 25 years, with drawdowns limited by stable earnings growth. And you can see that here, drawdowns being limited by the stable earnings growth, drawdowns limited here, steady earnings growth versus the S&P drawdowns and cyclical nature of the underlying earnings. But note that there's something else actually taking place. Under the surface, as the S&P 500 moves through the various phases of the business cycle, valuations change relative to the stable earnings portfolios. While it should be obvious from the chart that our stable earnings portfolios perform well over the long term, let's go ahead and illustrate what risk-reward looks like and explore these opportunities to allocate additional capital to the strategies when the risk-reward is favorable. To get a better understanding of what favorable risk-reward looks like, we need to first realize that stock prices simply do not go up in a straight line. They tend to move more like waves in the ocean relative to their forecast earnings growth trajectory. At Pacific Point, we monitor these price movements alongside forecast earnings on both an absolute and relative basis. We do this in the form of price earnings or PE ratio analysis. And we combine the analysis with measures of variability relative to long-term trend. In the following chart, the upper and lower red horizontal trend lines mark the +1 and -1 standard deviations from that mean average relative PE over the 10-year time frame. The following chart illustrates what we would consider to be a favorable risk-reward environment with the stable earnings core portfolio currently trading below its 10-year average PE ratio relative to the S&P 500. It's actually approaching -1 standard deviations below its 10-year mean relative PE. This is the type of environment we would look to increase our allocation to the stable earnings core strategy. As we move to the stable earnings dividend portfolio, you will see a similar trend currently trading near -1 standard deviations below its 10-year average PE ratio relative to the S&P 500. Again, this is the type of environment we would look to increase our allocation to the stable earnings dividend strategy. Moving to the stable earnings ESG portfolio, you will see it is also currently trading below its 10-year average PE ratio relative to the S&P 500. And again, for anyone requiring an ESG strategy with what we would consider to be an all-weather performance profile, this is the type of environment we would look to increase our allocation to the stable earnings ESG strategy. As you can see with stable earnings portfolios, there really is never a wrong time for the right allocation. How can you learn more about the stable earnings family of core equity portfolios? You can visit our website at www.pacificpoint.net. You can access the asset management menu. Beneath that, stable earnings portfolios overview, give you a nice overview of the strategies. You can also access our 3-part webinar series on the stable earnings portfolios through our Research Lab menu options. Research Lab menu option, simply access webinars. How can you get access to the stable earnings family of core equity portfolios? We actually have options for both financial advisors and individual investors to get access to the strategies. Financial advisors affiliated with Osaic, formerly the Advisor Group, can access our strategies directly through InvestNet. All other financial advisors can also get access to the strategies through InvestNet or Schwab or the Access Wealth platform. Individual investors currently working with a financial advisor, you can simply request access to the Pacific Point stable earnings portfolios through your financial advisor. Individual investors not working with a financial advisor, I would encourage you to reach out to our senior wealth advisor at Pacific Point, Brandon Healy, for more information. If you'd like more information on how you can work with Pacific Point advisors, please contact us directly at 858-356-6600 or email us at info@pacificpoint.net. Be sure to visit the Pacific Point Research Lab on our website, and while you're there, sign up to receive our research delivered directly into your email inbox. You can also connect with us on LinkedIn at Pacific Point Advisors. Thank you for attending.